Hello and welcome to the website of Edison Investment Research. I'm joined today by Arun George. You're in the institutional team here at Edison and you're here to talk to me about Devro. They're an interesting company. They're involved in collagen casings, and these are the casings that are used for meat products, specifically for sausages. So forgive me for asking you, is Devro's business sizzling at the moment, Arun?
Yes, I would think so. If you look at the overall market growth, excluding China, it's growing about 4 to 5%. And there are two reasons driving the market growth for collagen casings. First, there is the increasing protein consumption in daily diets, especially in emerging markets. Secondly, this is very specific to Devro, there is a trend to replace natural gut casings with collagen casings because one, collagen is most cost effective. Second, the supply of natural gut, especially from sheep, is quite limited.
What do you see as potential constraints to that growth in the future?
Right now, is crucial constraining factor is capacity. And the way it's trying to address this capacity issue is by instituting a capacity expansion plan which aims to increase its capacity from 2010 levels by 20% by January 2014.
When you look at the company, if you look at its website or talk to people in the company, you hear about this brand or this activity called SELEX. What is it and what will it mean to Devro?
I think SELEX is a particular line of casings, is very innovative, and what it does is it plays into this whole trend of shifting natural gut to collagen casings. Now the product has been so far successfully received. It accounted for about 4% of last year's revenue. The target is to double that to 8% this year. They're on track for that, and about 10% next year.
Let's talk about China, because they account for around 40% of the global collagen market, and the company within China, Shengguan, has 90% of that share. Really, I mean, do they stand any chance on making inroads as far as China's dominance of this market is concerned?
China is a sticking point, I think, for most investors because, yes, it is a low-margin market, but given its size and growth potential, Devro has to address it at some stage. Now, China is dominated by this company called Shengguan, 90% market share, as you stated. Now, the issue with Shengguan is that its products are about 7 to 10% cheaper than what Devro could offer. So as a consequence, you have two ways of addressing this. One, you have to be price competitive. You need to establish a local manufacturing facility. The second way to do it is try to segment the market, try to play into Devro's expertise.
How do you value Devro, both now and also looking to the future?
If you look at Devro's rating right now, it trades at about an 8% discount to its two nearest peers on a FY12 EV by EBITDA basis. Now, I think Devro is definitely the global leader in collagen casings. It's got a very innovative track record of launching products. That discount is not warranted. So if it trades at about 10 times FY12 EV by EBITDA, I think there's a fair reflection of its potential to grow earnings by both the top line and the bottom line. At such a rating, the share price would imply about 362p. That's about a 13% upside to the current trading price.
Well, thank you very much for introducing us to Devro. Plenty to talk about and also plenty to read about in your reports. Arun George, thank you very much for joining us.
You're welcome.